Time now for the markets with Leighton. And Leighton, you say the analysts say there's a long-term downward trend for cotton.
Yes, and recent bearish numbers from the USDA certainly aren't helping matters. In the markets this week, big supplies continue to hinder cotton. A weaker dollar as October closes helps corn and soybean prices, and recent cheaper meal benefits hog and other livestock producers. As we look back at October, the past 3 weeks have been extremely volatile for cotton, according to analyst Sharon Johnson. And the bottom line here in the first weekend of November is that the cotton market is stuck. Analyst Naomi Bloom is very pessimistic, in fact, about its future.
It's trapped in this range where 77.5 is resistance and 70 is support, and it doesn't have a reason to get out of that range. The euphoria last week was about potential quality concerns. With our U.S. crop, there was something with the coarse fibers, and it might affect spinning, and things could break during that process. But in the reality, we have, as a global supply, 270 days worth of product, which is the most ever. So we're not going to see cotton rally. And in fact, even if they cut production next year in terms of acreage, if we go from 12.2 million acres down to 10 million acres, and even if we have good yields this year, it's not going to do a whole lot as far as affecting the ending stocks. So cotton is stuck.
A couple of factors are said to be at play in the positive market move for corn and soybeans late in the week. One, a weakening dollar, and two, disruptions in South American planting make U.S. grain more competitive on the global price stage. Extension economist John Michael Riley discussed corn and beans with me on Wednesday of this week. Well, for a change, John Michael, we have a weaker dollar at play as we record here.
We do, and that is providing a little bit of upward movement in terms of prices for most of our ag commodities. In terms of corn and beans, it is helping out, but it's helping out at a time when prices have been suppressed over the past number of weeks due to the fact that we've had a strengthening dollar for the most part. There's been times of weakness, but largely a strengthening dollar, which is never good for exports. It makes our goods more expensive to our friends overseas, and that's played into, along with a weaker global economy. And for the most part, most of our ag commodities, but more specifically soybeans and corn, have really suffered as a result of this. We've seen lowering expectations in terms of exports and the hope for exports through the future.
But corn has suffered more than beans as far as where the prices have been.
Exactly. Year to date, corn exports are down roughly 50% from where we were at a year ago. So really a lot of pressure on corn prices as a result of the strengthening dollar over the past couple of weeks and the weak global economy.
You would expect that pressure on corn to continue as we get into November?
As we get into, granted, we're seeing a little bit of weakness in the dollar, which helps, and maybe some buying activity going to take place. But for the most part, unless there's a drastic change in these two factors, it shouldn't really have a huge impact.
All right, now on the soybean side, meal prices have kind of helped support things here.
That's correct. We have seen some upward movement in meal prices, which has worked its way back up the chain and is helping out soybean prices. The cattle industry, huge cattle poultry industry, huge users of soybean meal, and the tightening supplies across many of these industries is obviously lower demand, total demand, but then there's this higher, as we see higher prices filter in on those commodities, it's brought this expectation that there is going to be some expansion across these various industries and thus more demand for soybean meal here just recently.
And briefly, there is talk South America may be having some trouble with its crop.
That's right. There was a beforehand expectation that they're going to bump up their acres for corn and soybeans, but here just over the past couple of days we have seen some concerns coming across the wire in terms of weather.
Our trivia quiz this week focuses on what used to be an important crop on the Gulf Coast, tung nuts, from which tung oil was produced. Here's the question: what county used to be the tung nut capital of the world? Is the answer George or Stone or Marion or Pearl River? I'll tell you which one is correct in a few more minutes. A temporary decline in meal prices was welcome news for Mississippi's #1 ag commodity, chicken. But of course, this was a good development for the hog industry in the United States overall as well. Analyst Mark Gold says this kind of news, even if only temporary, is always positive for the livestock sector.
You know, you've got to watch these meal prices. Meal prices have come down. Technically, again, there's another chart that couldn't look worse. That gives me hope that, you know, maybe guys are holding off on this liquidation as these meal prices have come down, as the corn prices have come down. So I believe that, you know, we've got some positives in this hog market. The spreads kind of bother me. We've got some of the nearbys at pretty good discounts in here. I'm not sure, you know, that would be normally indicative of liquidation, but we haven't seen it. So maybe some of the, you know, October, December hogs are maybe a little cheap relative to the back months. But overall, I think the hog producer has to watch these meal prices. If we can continue to keep meal under $500 a ton, I think we've got a chance of pushing it even lower. That'll be healthy for the hog market. And I think it'll encourage guys, whether it's poultry, whether it's hogs, that, you know, there's still some money to be made in certainly in the livestock or the poultry arena.
We end the markets in forestry products, where exports of U.S. softwood logs and lumber to China are way off. Wood Resources Quarterly says, in fact, this business is down as much as 41% compared to the same period in 2011. Canada and Russia are the two dominant suppliers of softwood lumber to China. The United States, Chile, and New Zealand pick up the remainder of the business. Now, quickly looking at our trivia answer before we turn to the new feature story this week. Well, D is the answer that you want. Pearl River County used to be the Tung Oil Capital.